single trade ends in divorce, right? And so either the market's going to take all of your profit, or you can. When you see your account down 10%, then you start to question yourself, like, am I doing this right? It would be the equivalent of, like, you read a book on how to drive a car, and then it's like, yeah, this makes a lot of sense. Then, like, and you don't know how to drive a car yet, right? Like, you just read the book, and then it's like, all right, I'm gonna go buy that Ferrari, and I'm gonna test drive on that.
What's up, everybody? My name is Mike, and I want to give you 8 ways that you could trade better. In this video, we're going to talk about 4 types of stop losses that you need to set. Different types of charting books. A trade that I took in ARWR that moved 40% in just a couple of days. Going to show you how to identify those. Scaling into and out of trades, position sizing, psychology of trading rules, developing systems, and getting better entries. Hope you enjoy this video.
The first question that came in was from Abalash. He was asking me about the types of books that could help with chart reading. And the ones that have influenced me the most are these over here. I'll share my screen again. The How to Make Money in Stocks by William O'Neill. That's the one that I first started on. Read that about a dozen or so times. Fantastic book, great for beginners. Then I would say that Stan Weinstein has really helped for creating exit strategies, and so has Minervini's books. Minervini provides more advanced chart patterns. So if you start with O'Neill and then go into Minervini, I think that it's a great transition to get more advanced if you're looking for that kind of progression in chart patterns. And then, of course, well, what you're getting here, right? Because this is kind of the culmination of everything that you see on this page, plus a lot more stuff. So, and you could come to this page here. The shortcut is marwealth.com/books, and that brings you to this. So, what other questions do we have? What questions do you have, Victor?
Yeah, I have, actually, I was about exit and selling.
Okay.
I had a question about because I'm sort of thinking how to look at this this spread or this because when I put like a limit buy order,
okay,
and then it gets filled, and then it's like a spread, and so then it's like more than and then I put a stop loss. And then it's also a spread, a little spread on that, so that it's like the risk amount gets more than I calculated. And then I was thinking how to look. Maybe I could adjust the stop loss to make it a bit tighter, or I could look at it like it's like just additional costs. I was thinking how you look at it.
Well, you're right to think that there's a lot of different ways to attack that problem for managing risk and managing risk throughout the trade. So the first thing that we do, or the main philosophy that I have, and let me stop sharing the screen for a second, so that way the picture's better. The main philosophy that I have around managing trades is to have 4 different types of exits, right? And I kind of think of it like you're going to the movies. You don't know like exactly what the movie is going to be, right? Like if it's a brand new movie. So you walk in and you have these big doors that you walk into the theater, right? And so I would want to try to sit towards the back of the theater in case if the movie sucks, you could run right behind you, right? So that's the first. That's the first stop. That's the stop loss, right? So that's exit number 1. But when you get into the theater, You also want to have other types of ways to exit the theater in case if somebody yells out fire in the middle of the movie. So you have the one right behind you.
Mm-hmm.
Then you have the others that are scattered around. And so for us, for traders, we have the profit target or the profit targets, right? Because we should have more than one place where we'll sell into strength. And selling into strength takes a bit of, it takes some practice, selling into strength for most people. The reason why is because when a trade is treating you well, right? Like it's like doing what you want it to do. Like most people want to hold on for it to keep on going higher and higher and higher.
Yeah.
But and so they end up marrying trades, right?
Yeah.
And I actually wrote a post on this not too long ago that people fall in love with trades, they marry the trades, but every single trade ends in divorce, right? And so either the market's going to take all of your profit or you can. And the way to make that happen is by selling into strength along the way. So we want to have multiple profit targets along the way. So that's 2 exits. The third exit is to have some kind of a trailing stop. It could be a moving average. It could be an average true range. It could be something else that's going to move along with price. So that way, when the price starts to lose momentum, then you're scaling out. And in every case, you're scaling out of positions. You're not just doing an all or none kind of deal, unless, except for the stop loss, and in some circumstances, when you're getting like a gigantic parabolic move, kind of like Beyond had early on. Those are the types of things where you would want to sell everything into this move. And then the last kind is what I call a backstop, where price retraces, falls below support, and you would exit the position that way. And actually, let me show you an example of how one might do that. So on the screen right now is Arrowhead Pharmaceuticals, ticker ARWR. This is one that was mentioned over the weekend, right? We saw this triangle pattern setting up right ahead of earnings. It broke out monster volume, gapped up above the entry point, which was down here, C, but there was multiple ways to play it too, right? So if you didn't buy on the breakout, there were another couple of ways to play it. You could have bought it above the high, or the way that I like to play moves, like when there's a big breakaway gap and I missed the initial entry point, right? Because, and please stop me at any point, you or anybody else that wants to chime in and ask a question, stop me and I'll go back and explain things again. Don't let me ramble for too long. But with this, so breaks out on earnings. I like to wait for it to come back in a little bit, give us another entry point, and then start to get in. So that way you're getting in closer to a new level of support. Because if you buy up here and it hasn't really formed support yet, then where's your exit going to be? Is it going to be down here? Is it going to be down here? And that's where your reward to risk starts to get out of whack. So if we were looking at it from this perspective, right? So the original entry price, $49.85, $47.80. So let's say we've got a theoretical $10,000 account, right? We want to risk 1%. We want to buy in at $49.85. And in case you don't know, this is the trade emotion meter tool that I have on Mara Wealth. It's free. And then the stop loss was $47.80. Right, so 47. So with this, it's telling us that you would buy 48 shares, 49 if you round up, right? But let's say it gapped up and the lowest price you could have bought on the gap would have been 52.58, right? Like the low price is there. So on this point, the lowest was 52.58. And let's say that we caught that 52.58. Well, now keeping the original stop loss, we could buy 20 shares or 21 shares if we round up, while still risking the same amount. Right? Before we were able to buy more than twice as much. This is how we're managing the risk, right? Because we want to think of our risk in terms of percent, right? So on this $10,000, I only want to risk 1%. I only want to risk $100. So that's going to be the same 100 if I'm entering at 52.58, if I'm entering at 49.85, or if I'm entering somewhere else. And the thing that I'm looking at to figure out my, like, is this trade worth taking, is how far do I think that this trade could run, right? Well, when I first looked at this trade, I thought that I had a profit target of 60, right? So the difference between my entry price, 49.85, and exit 47.80 and the target, right? That gave me a reward to risk of almost 5. Right, so that means that for each dollar I risked, right, the difference between here and here, would give me a potential reward of 5. But so far, we can see that it's run much higher than that. Yet at this point, it's given us 11 to 1.
Oh, yeah.
But would we just like hold on to this and let it run forever, right? Because you don't know when exactly it's going to come back in or collapse or do anything. So that's why we want to have multiple ways to exit. And so the ways that I mentioned before were taking profits off, like as you get closer to your profit target, right? So at this point, you would be selling already, like you would have taken profits here, and then you would have been holding a portion of it to continue running. The trailing stop, I like to use the 5 EMA as my first trailing stop. So if it closes below the 5 EMA, right, that's this black line here, then I would exit a quarter of my position. So notice how it touches, right? It pierced it down here, but it never closed below. So still holding, right? So based on the trailing stop, you're good to go. For the back stop, where you would have support, like over here, it ran up, pulled back in, and then broke out. Great. So the first floor, I would say, would be right there. Right? Then it ran up again. And I started to consolidate a little bit, maybe touched here. Maybe this is a floor that we could say like somewhere around this level here, right at around $64. But look how far we are, right? Like, do we really want to give $9 of space? Maybe we have a stop somewhere in this neighborhood. And another thing that I'll do too, if there's like no real near-term support for it to come back to test and continue going, then I'll sell a little bit more into strength. Because it's not about catching the ultimate top, it's about this idea paying us. And the way that it pays us is by having these different kinds of exits.
So on
So
the
that
initial,
makes sense. Oh, somebody has a question.
yeah, sorry. So on the initial day, I know you could have increased the stop right to above. Can I enter in that way? Because I was able, I looked at this trade, but when on the initial day, it went around 7% up, right? So I thought
on
of
each day.
going in, but I wasn't completely sure. Can I do that? And can I increase my stop to the same risk to reward ratio? Or
You could, right? And so it's all a matter of how we going to manage our risk throughout the trade.
okay.
Well, let me ask you this: what time frame were you looking at it on?
Uh, ah, I was just
Were you
I don't
looking
know.
at it from like a 2-hour perspective, on a 30-minute perspective, on something else? Because that might affect how you would enter too, right? Like, so for example, let's say I was playing this based off of a daily chart, right? Then
Mhm.
how I would enter, like I might not want to enter until the end of the day, right? If I'm playing it based off of on a daily chart. Like, and for gap up moves, like I generally like to have the gap up happen, and then if for the gap ups where the high of the day and the low of the day are tight, then that gives a fantastic reward to risk way to play, especially on something like, so let's say, just for example, that the high of this and the low of this were really tight. Right now, on this, it was not. On this, grabbing the little measuring tool, between the high and the low of the day, 14%. That's very wide, right? So in order to have the type of reward to risk trades that I look for, I like to have at least 3-to-1 on every trade. That means that this would need to go up to what, 42%, right? Like possible, right? Like it's well on its way to doing it, but most trades are not going to give you a 42% move. And is it worth like, so 42 for a trade that's going to give 42%, I would want it to be a lot more than 3-to-1. So does that mean that we can't play this at all? No, it's a matter of finding a better way in, and that's why I often like to look at the lower time frames for swing trading purposes, because you'll be able to get that better reward to risk, like we did, like we were talking about earlier with seeing this as a pennant, potentially, and using this level down here as the stop loss, right? So would have been able to get in on this day, and you're within about 4.5–5% of your stop loss.
Okay, yeah, makes sense. Yeah. Thank you.
Yeah, no problem. But so like, and this type of trade here is why we want to play the momentum, right? Like, and to just make ourselves available for the opportunity. Most trades do not work out like this. Most trades end up being more like the other ones that we had on the watch list, right? Like, for example, Disney, right? Like broke out and then kind of farted around for a little bit, then ran up, then came back down, and like now it's still like consolidating sideways for a little bit. So on this one, what I actually just did this morning, and I haven't had a chance to post it in the room yet, was acting this as a potential add-on, right? So it's already in profit. It's already in profit. And if we break above this, I'm looking at this level down here as potential support, because if it breaks out above that and it comes back in, it should hold this lower floor down here on the 2-hour. It's been moving around sideways for a day and a half or so. It's got the 21 PMA and this is so, whoops, didn't want to do that. Let me undo that. So this is so tight that this was what I was looking at earlier. Let me go back to so 152.57. Yeah, I wanted to enter at 152.65, and my stop was going to be 150.90. Right. So if I'm risking 1%, it comes out as being way too aggressive, right? Because as a swing trader, we've got to deal with overnight risk. So what the motionator is saying is that, hey, look, you're going in with more than half of your account, and if say on Monday Disney craps the bed, then you could end up losing dramatically more than the 1% that you intended on risking. So what I did was like, all right, what happens if I'm only going to risk 0.5%? Oh, that's still kind of aggressive according to this. Great. What if I just risked 0.1% or 0.2%? Right? So great. So I could go in with, on this trade, I could buy 11 more shares on a $10,000 account. So basically, like, I'm going in with like almost 20% of my account. Or if I wanted to do a quarter, 25% risk, right? So with this, I'm only risking $25, $10,000 account, and I'm going in with a little bit more than 20% of my account, and look at all the potential upside that I have. Right? Because if it breaks out here, I'm only risking 0.25% to get all this additional upside from where I believe that it could end up going, which was 165. I think I moved my profit target. Yeah, even better, like way up here at 180. And the way that I came up with that original profit target of 180, in case if anybody's like, hey, how'd you come up with that? It was looking at the original breakout levels. So from what we were talking about earlier, one of the books that I recommended was this book, How to Make Money in Stocks by William O'Neill. One of the things that he studied and learned about was that when stocks break out of primary bases, and what we had here was a big cup with handle, right? Big cup with handle, arguably a flat base, depending on how you're looking at it, but consolidation of multiple weeks, about 13%, 14%. When you get a breakout, and especially a breakout on heavy volume like we did, the potential move is 20% from the pivot. So 20% from 147.15 is about, brings us to close to 180. So that's how I came up with that. Does that mean that we're necessarily going to have a smooth ride between here and there? No, right? Definitely not. And that's where the other types of stop losses come in, right? Because we want to take advantage of the potential move, but we want to be prepared in case it rolls over and it doesn't happen, because a lot of these will break out and then come back, retest the pivot, and we only want to be in the trades that are working extraordinarily well, right? Because there's so many to choose from. The market's a complete endless stream of opportunity. So stick with the ones that are working and allow the market to pay you as it's going to pay you. Like, I have no idea if this is going to break out and go to 180. It could roll over in the next hour for all I know. Like, I'm just, we have a set of rules, a set of principles, guidelines, whatever you want to call it, operate based off of those, and then let the market do what it's going to do. And how did I come up with all this stuff? Studying and back testing it myself. And that's really the way to get good at this if you want to get good at it. Um, None of us need to reinvent the wheel. The wheel's already been developed. It works, but we do need to know how to drive the car. And the way that you're going to learn how to drive the car is to actually get behind the wheel and figure out what your style is going to be. That's where the back testing comes in, coming to stuff like this, getting great people around you. It took me a decade to finally get people around me, and I stumbled for the first decade of trading. I've been trading now for 21 years. This is year number 21 for me trading, and when I finally got people around me that knew what they were doing, that's when I finally started to find the consistency.
Yes.
Other questions?
I'm a bit curious how you look at because I think it's a bit challenging with this like rule-based discretionary approach to with rules. Because it's a bit, it's not like mechanical system. I think it's a bit challenging to with the rule. Do you have any how you handle rules or how you look at rules?
So, do you mean like how I come up with my own rules? Or
yeah, and following and
like the discipline part of it?
yeah, and also yes, maybe I'm not specific now. I know. Yeah, maybe the discipline.
Do you have an example?
No, because before
When have you found it hard to follow rules, or have you ever?
What did
have
you
ever
say?
found it difficult to follow trading rules? Like I know that I have, right? Especially early on. But is there an example that you have?
Yes.
Okay.
I'm not because I was like into a mechanical system, like very easy, like to follow. I was trying. I was doing it pretty I was doing this Mark Douglas exercise, you know, this, and I did it, but I think I tried to do it with this like Minervini style, but I think it's more challenging because it's I was trying to do this exercise with rules I made up, but it's, I don't know, maybe it's just because it's well, it's harder, I think.
So did you well, when you came up with the rules that you were going to follow, did you back test it first, or did you start off with live money?
You know, now with this style, you mean?
Yeah.
I tried to back test some, like did like this forward testing, but I think it was a bit hard also. So I didn't really do it, I think. Maybe that's why I didn't. I don't know.
So one of the things that I found challenging too early on was the back testing part of it. Like I thought that it was very mundane, a waste of time. Like I didn't feel like like I felt like I knew a lot more than what my results were showing, right? Because like I read all the books and studied with different people and all that. And like I didn't want to do back testing or demo trading. Like I just wanted to go in with real money. And so a lot of what made sense, right? A lot, like things that make sense, and then trying to apply them, right? Like so you have these rule-based systems that you get from guys like Minervini, guys like O'Neill, Douglas, Weinstein, whoever. Like there's loads and loads of fantastic rules and systems and they do work, right? You could go to Market Wizards, any of the people that are in there like have fantastic systems that are proven to work. And so like you look at those rules and you try to apply them yourself, and I tried to apply them myself. And because I haven't gone through the steps of like, like I understand it intuitively, but when I tried to apply it, it did not work out as I thought that it would. Right? Like it's a lot different to understand that, oh, you could get 5 losers in a row or 10 losers in a row, but then when you see your account down 10%, then you start to question yourself, like, am I doing this right?
Oh yeah.
Right? Well, like, is it me? Is it the system? Like I don't know. I'm kind of in a hole now. I hope that it's that I'm doing things right. Versus, because you haven't. It's not to the point where like it would be the equivalent of like you read a book on how to drive a car, and then it's like, yeah, this makes a lot of sense. Then and you don't know how to drive a car yet, right? Like you just read the book. You intuitively know how to drive a car, and then it's like, all right, I'm gonna go buy that Ferrari and I'm gonna test drive on that, and I'm not gonna have any kind of instructions or anything. I'm just gonna go in and go for it, right? Like, well, what's gonna happen? Like you're gonna slam into a tree or a building or something. Why? Because you don't have any experience yet. You could read everything, but until you actually have the experience of doing it with trading, it's like there's so many examples, right? Like the same thing as a doctor who just reads a textbook and would try to go do surgery, right? Like it doesn't work that way. They have about 3 years of an internship and then another couple of years of a residency, and then they finally get to become a full-fledged doctor. Same thing with this. So for a rules-based system, I think that having a guide like something like this is going to be helpful. I think that putting in the work, like actually putting in trades and seeing like how they play out is important too. And so how many? Ideally 100, at least 100, right? Because at 100, that's when we start to get statistical significance, where if you take 100 trades, or let's say we're flipping a coin, right? So for every time that the coin lands on heads, you win, right? Like you win $2. But every time it lands on tails, you lose $1. Great game, right? Like you play that all day. But let's say it's your first time playing, you flip, lands on tails. You flip it again, 5 times in a row, lands on tails. You might be like, oh, this is rigged, if you didn't know anything about the game, and walk away. Meanwhile, if you played the game 100 times, you'd come out a winner, right? Because like the law of large numbers, you're going to come out to the average. And you'd have about 50 tails, 50 heads, like give or take. And you'd come out ahead. But that's what trading is. That's what we want to make trading into. But the way that we get there is by having this deeper level of understanding of how the rules actually work. And we get to that by doing the back testing, doing the demo trading, and just like doing this on and on and on. Like I wish I did more back testing and demo trading early on, rather than using real money to learn these lessons, because learning with real dollars, like in the beginning, is the most expensive way to do it, right? Like we want to get to real dollars, so that way, because there's another psychological dynamic to the game when you have real money at risk. But when you're learning like the systems and like gaining trust in the rules, like that part you could do without real money being at stake. Then you could start to put a little bit of money at stake to start learning the psychological aspects, like how do I react when there's real money on the line? And that'll be different for everybody. And that comes back to what our beliefs around money are, right? That's why like I do this whole thing about beliefs. And it's like one of my favorite topics about beliefs, about trading beliefs, money beliefs, and how different types of beliefs can end up hijacking us if we're unaware of them. I think that trading can be real simple and easy, but it's going down the right rabbit holes to figure ourselves out. And then once we get to that level, right, and it doesn't take that long in the grand scheme of things to get really good at this. Like I think that most people could get really good at trading within about a year or two, right? Like starting from zero. It took me a lot longer, and the reason why is because I went about it the exact wrong way, and I kind of, ran out of ways to fail. So I started winning. But you guys don't need to do that. That's why I'm trying to help here and build this stuff, so that way everybody has a better path. Questions? Did I put everybody to sleep?
No. Maybe there's someone else wants to ask.
Let's see. Oh, we've still got Sean in the room and Abalash in the room. And so we had two questions before too. So we went through exiting trades. How about entry points? If one of you guys have a question, go ahead and ask. I could run through finding better entry points. And then at 12:45, we need to end it because I've got a client call coming up at 1 o'clock. And that's open for all of you guys too. So if you're unaware, I do one-on-one coaching. Everybody in Traders Mindchat too gets a free 20-minute one-on-one with me, and we could go deep into whatever kind of questions that you have. I'm looking forward to doing these a lot more often too, because I think that we could all learn from each other. Like I continuously learn all the time. Right? Like I don't know everything. I look forward to learning more every day. So let's talk about entry points. So am I still sharing the screen? No, let me share the screen. So let's see, is there a particular trade that we want to look at? Let's see. If you've got one, shout it out, but otherwise I'll go through the watch list, which will be updated this weekend. And so Arrowhead broke out. Let me see if there's any that didn't break out. Yeah, Service Now has kind of been, it started to break out and it's just been farting around, so maybe that's a decent one to look at. Right, so with this, it broke out, right? Like it made, this was basically just like coming off the lows here, and it was starting to round out, well, what could be maybe a cup-shaped base, but the main idea was that it consolidated, came off the lows, broke out on tremendous volume down here, and then it gapped up, right, on even heavier volume, and it followed through. So as it started to consolidate, it's like, all right, this looks like it's moving in the direction of the gap. How can I find a way in? Well, on the daily chart, it didn't look as appealing to me yet, but it did seem like there was a support level that was forming right around here, right at 276.5. This is 276.89. So around the 276.50 level, right down there. Right? Does that make sense? Like that it's getting support right around here?
Yes.
Yeah, and so I started to see that like right at around here as it was moving. But when I'm picking it up to figure out how am I going to play this thing, I'm looking at it down here on the 2-hour, and I'm also looking at it on the lower time frames too, to start to figure out how am I going to pinpoint my exact entry point. Where am I going to get in? Where am I going to get out if I'm wrong? And I always like to get in as close to support as possible for what I think we started talking about it in the beginning, because how we, where entry price is, where the exit is, that's going to help figure out how many shares we can ultimately buy, right? Yeah, where say price was at 155, then we're buying significantly less. Even on this, it's still a lot, but let's say we're getting in at 160, conservative. But let's say the entry price was all the way up at 170, fearful, right? If the stop was going to be down here. But the closer that we are to...
Hey, Michael.
Yep.
Hey, this is Sean. No, I'm at work. I just wanted to say thanks. I gotta log off. I was listening while doing work, so didn't want to be rude.
Yeah, man, my pleasure. Thanks for dropping in.
Yeah, well, hopefully we'll see you next week.
Absolutely.
All right. Thank you, sir. All right,
Bye.
take care.
Yep. So that's that's kind of the idea. We want to try to find a spot where we're going to get into a trade as close to the support level that's holding, and get in based off of a break of minor resistance. Right? Like, so over here, it was starting to break out, came right back in. Fantastic. Now I'm in a trade that's just chopping around, going nowhere. But because I got in so close to support, that like it's okay. That support level held, right? And within a couple of days, it's starting to finally break above and make some headway. So that's one of the main ideas. We want to be trading in the direction of the trend. We want to look for a tight consolidation, like kind of like how Mark Minervini looks for volatility contraction patterns. That's essentially what we're doing here. We're looking for the volatility to contract, get in at a point where the entry and the exit is really close together. That's going to allow us to leverage the position and then play the breakout for as long as it's willing to run.
You buy on the way up when it breaks up.
Yeah. Just so like and right after this, I'm gonna have to get going, but that's basically what AMD did for us a few weeks ago, right? Well, when it broke out of this, right, I missed that initial breakout there, but it's like, all right, it's moving. Now we have this solid uptrend coming in on heavy volume, great. Then it gave us this right ahead of the weekend, like, oh, fantastic, well, let's go in on this, right? Little tiny flag on the 2-hour, broke out, lots of momentum behind it. The industry group, everything that we looked for, AMD had. Great, enter there, boom, starts to run up. Then it falls back below the 5 EMA, below the 10 EMA, hitting some of the trailing stops. All right, so we're starting to scale out of it, right? And I had another stop below the 21. right? So if it closed below the 21, then I would have sold another portion of it. It broke below it, but it never closed below it, so I'm still in it there. And on this, it's forming another entry point. Fantastic. So if you remember, and these notes are in the chat room, broke out again over here. Great, adding to the position. Then it broke out somewhere else along the way, and we added to it again. Right. So there was ways to leverage in, and then it wasn't until all the way up here that it started to scale out. Right, because it's like up now it's closing below the 5 EMA, sell out of that portion, close below, and on this, right, because it ran so far, on that reversal, I saw that as a like what would be a support level, where if we started to break below this, it's like, all right, I feel like this trade is done for now. And yeah, I ended up selling part of it on that bar and the rest when it broke below this. And I have not re-entered this yet, but it actually does look kind of interesting, forming some kind of a potential, maybe a triangle or something. I'll need to take a close look at this over the weekend. But that looks kind of interesting to me. But we'll see. All right, so that's all the time that we've got for today. I really hope that this was useful for everybody here. I want to say thank you for stopping in. I hope you had a happy Thanksgiving wherever you guys are in the world.
Hey, thanks, Michael. Yeah, it was very useful. Thank you.
You're welcome.
Thank you.
You're welcome, Matt. And yeah, I look forward to doing more of these. And we'll see for the date and time. I'll put it up in the chat room. All right.
Bye-bye.
Everybody.
Bye.